It is really important to understand your credit report and ensure it is in the best shape it can be before you apply for credit. Whenever you apply for credit in its many forms, mortgage, credit card, personal loan, mobile phone contract or utilities, the lender will usually check your credit report. Your credit report may also be viewed by employers and other institutions with your permission. A good credit report means higher likelihood of finance and cheaper finance. A poor credit report means higher costs and less likelihood of getting credit. Also, any failed applications for credit will further impair your ability to get credit in the future. So what is a credit report? There are a number of credit reference agencies in the UK: Experian, Equifax and Call Credit. They create a credit report using details from banks, credit card companies and other lenders of the debt outstanding for each customer and if payments have been made on time. This is combined with electoral roll information, address history, CCJs, bankruptcies and voluntary arrangements, as well as financial links with other people, such as where you've made joint credit applications. Details of all the credit applications that you've made and if these have been accepted or rejected are also included in the credit report. So how is a credit rating determined? A credit rating is an assessment of how likely you are to repay debt in combination with the type of customer a lender wants, and how this is calculated can vary between lenders. The credit reference agencies also calculate their own indicative rating scores based on your credit report, and these will not be the same as the lender's scores, but they may be broadly similar. When you request a loan quotation through us, this does not impact your credit rating. When you submit your application to the lender for any form of credit, this will be recorded on your credit report. Making lots of applications for credit in a short period and having multiple rejections for credit are likely to lower your credit rating and result in less likelihood of future credit being granted. If you are refused credit, the lender should tell you why they have refused credit and whether it is based on your credit report. They should also give you details of the credit reference agencies they've consulted, and you should then check your credit report to correct any inaccuracies. So how do you improve your credit rating? First, make sure you are on the electoral roll. Make payments on time or contact the lender as soon as possible if you know you're going to miss a payment. Check your credit file and correct any inaccuracies, including ensuring all your debts are registered to your correct name and current address. If you split up from someone that you've had joint credit with, contact the credit reference agencies to de-link your records. Cancel any unused credit cards and store cards. And space out credit applications, including mobile phone contracts. Your credit report is your data, and usually other institutions can only view this information if you have granted your permission. You can view your credit report by going to the credit reference agency's websites. Your credit report will show you which organizations have queried your report. If any information is incorrect, you can contact the credit reference agency to ask them to correct it, or you can add a note to your record.